We begin with breaking news. The Bank of Canada has cut its key rate by 25 basis points, bringing it down to 2.5%. It comes after the annual inflation rate rose in August, 1.9%. That was up from 1.7% in July. And most economists expected today's cut as the economy has weakened in recent months due to the trade war with the U.S. and the slowing labor market. And joining us live with more on the reasons behind the decision is financial advisor Allan Small. Always appreciate your time, Al. So once again, we're saying not a big surprise, but this was, from your opinion, this was needed.
Absolutely. And I'm hopeful that this will be the first of a few to come before the end of the year. Obviously, Bank of Canada, we'll see what they say in a month from now, whether or not they'll cut again. A lot's going to be data dependent, as we know. Where's the inflation rate? Our target, or the Bank of Canada's target, is 2%. We were at 1.7, now we're at 1.9. Obviously below target, slightly below target, which gives the Bank of Canada, I think, the room to make a few cuts at this point. We know our economy here is pretty stagnant. We've seen the numbers. We've seen the data on our exports. We've seen the data on business activity. We've seen GDP, loss of jobs, almost 110,000 over the summer. We're seeing our economy completely coming to a slowdown, and I think it's all hands on deck. We're going to need to see more interest rate cuts, I believe, in the future. And I know, as the Premier would like to see, he'd like to see also maybe some cut in taxes going forward for some businesses. All that, I think, is going to be necessary as we move into 2026, when CUSMA will be up for renewal. Who knows what the U.S. is going to want from us?
I think a lot of people on the business side and in your business can appreciate that the Bank of Canada wants to help stimulate the economy. But we've seen what happens if you want to stimulate too much. You got a lot of people that are going to take advantage of lower rates, and a lot of the people who are finding themselves in this situation right now, where their interest rates have doubled over the last couple of years after a series of about a dozen rate hikes. What are your concerns in that regard about potentially stimulating the economy too much and people finding themselves even further in debt down the road?
Yeah, and that's always a risk, right? You know, we've seen that, people borrowing beyond their means. When money is very cheap, you get a lot of individuals buying perhaps real estate or homes that maybe they shouldn't be buying, a little bit too expensive for them, but they can do that because money is so easy to come by. However, at this point in time, in my opinion, I just don't think we have an option. I think we need to continue to try and stimulate our economy. Talking to some of the home builders out there over the last few months, we're finding that activity has grinded to a halt. People in the housing industry, we're finding some of these manufacturers, they're working 1 day a week for some of these people coming in to the manufacturing plants. This is very obviously cannot continue. And so we need to see some stimulation. We need to see growth. And cutting interest rates today by a quarter point is a start for that.
Well, when it comes to the housing market, I'm curious because we know that this is widespread, that there are a lot of developers. I know this from speaking to them and having even family in the business. They don't want to put shovels in the grounds for a number of reasons. It's too expensive, but also the bureaucracy and the red tape. It's kind of an interesting situation that a lot of these builders find them in. Obviously, the demand is there. We've got a growing population, but you have the people that are in charge of building these homes. They don't want to build them because of what's going on in the economy.
Yeah, and again, it's a lot of different things. Obviously, cutting interest rates, making it more affordable is one thing. Obviously, higher costs. The costs are very high. I don't know how we can get those costs down. Obviously, tariffs, lumber is more expensive. Just obviously, raw materials are more expensive. Cutting red tape, I think we can do. We can cut red tape. We can help these builders build quicker and faster.
And just very quickly, for the average small business out there who is obviously navigating through some very economic uncertain times because of the ongoing trade war and just the economic outlook for the country, what do you think this decision will mean for those small businesses?
I think it's a start, right? I think it's a start. Businesses will be able to hopefully borrow money cheaper to allow them to grow, to finance growth. But again, unless there's growth out there to be had, which means we need to make it very good, a good environment for businesses from outside of Canada to come to Canada, I think we need to do a lot more. Cutting taxes, I think, along with interest rate cuts, will go a long way for that.
And if you want some more information, you can always tune into your show, which airs on 1010?
On 1010 on Sundays, every other Sunday at 12 noon.
At 12 noon. All right. Thank you so much, Al.
Thank you.
Appreciate it.